Billions of dollars. This is how much money do we print and have in the system at any given time. Let me start at 1929. Show me here we go. 1929, here's the stock market crash, all right? Now, if you see, we were on the gold standard, so we couldn't print much more money. We had the stock market crash, but we didn't do all of the stuff that we're doing now, just printing money. Go ahead, step to the next thing. And we go up to 1941. That's the Great Depression. Still haven't pumped a lot of money into the system because, again, on the gold standard. Then we have World War II, and we take this all the way to 1965. You'll see it comes up. We had two wars. We had World War II, and we also had the Korean War in 1965. We were having the Vietnam War, but here's where it gets sticky. Because we had all these wars, and we tried to dogpile on with the Great Society. Well, how are we going to pay for all that? Well, 1971, Richard Nixon says, why don't we get rid of the gold standard? So that way, we can just print whatever we want. But we promise the rest of the world, oh, no. We'll never print too much. Really, we're good for it. I mean, look at our record here. We don't do that. Great Society kicks in, and look what happens. Next point, please. Look how we've devalued our money. This is up until 2000 when we have the Y2K scare, where everybody's like, bury your food and grab your cash. The computers are going down. That's why the government put this little spike here. If you see that little spike, goes up because they just dump a lot of cash into it, and then they bring it back in. They pull it back in, but it's difficult to pull things back in, especially when you have a horrible event like 9/11. Next stop is 9/11. You'll see it's just a little spike back up just a little bit. Remember how everybody was freaked out that the world was coming to an end? Do your patriotic duty. Go spend. Go out there and get into the stock market. Well, we did. And then this is the kind of spending we get. As you see here, the federal bailout's just about to begin. We're in, let me get into my Al Gore machine. Oh, it's a real inconvenient truth now, isn't it, Al? Look at this hockey stick. This is the hockey stick that Al Gore was talking about with the, the woolly mammoth coming back or whatever the hell he's talking about. Here's where we were in September last year. But then the Treasury decided we need to start printing more money. This hockey stick should take your breath away. This is devaluing our money. Al Gore said, global warming is not a political issue, it's a moral one. Thomas Jefferson said, doing this to our children is immoral. And I agree with him. We have pumped all of this money in and devalued our money. How is it not going to be worthless? This has never, ever been done by anybody ever before. Please share this video with everybody you know, all your friends. Please go to foxnews.com/Glenn Beck. We're going to make this available for you. Pass it on to your friends. This is real trouble. Not in 1,000 years. Perhaps in the next year. Back in a minute.
There is no doubt in my mind that what the government is doing is going to destroy the economy and destroy the currency. Absolutely none whatsoever. And I am 100% convinced that anybody who has their wealth in U.S. dollars will be just as broke as the people who have their money with Madoff. It's not going to matter. It is going to be destroyed. And I don't know how much time you have. With the dollar dropping 5% a week at this point, I don't know. Could the dollar snap back a little bit? Sure, of course. But what if it keeps falling? What if it's down 5% next week and 5% the week after that? And then what if it drops 10% and another 10%? Who knows? At some point, a year or two from now, the dollar could be dropping 5% a day. The inflation rate in Zimbabwe is over 100 million % per year. I can't even calculate what that is. But you know what? It didn't start off that bad.
Basically, the purchasing power of the US dollar from 1920 to 2009 to this year. And realistically, the government and some of the big branch bank organizations won't show you this because they do not want you to know what is happening. But as you can see at the top of this chart, over the last 76 years, the power of the US dollar has declined by 94%. 94%. But hang on a minute, that's not even the scariest part of this. Because based on the current monetary policies and the fiscal policies as well, the US has another 94% decline to go. That's right.
You and your family are going broke right now, and you don't even know it. And this is the truth. Since this video opened a debate on the subject, I feel a need to elaborate on it to make it a little bit easier to understand. The important thing to understand is that a little inflation is not the end of the world, and it may be necessary to allow the economy to grow. But what is not good, however, is the inflation that's going on today. In my last video, I mentioned the gold standard, and this was to emphasize that it would keep the Federal Reserve from circulating too much money and devaluing the currency that you already have. It's all about the percentage of money you have versus the amount of currency in circulation. To make the math simple, let's say there's a total of $10 million in circulation and you have $1 million. This means you have 10% of the total currency. Now imagine if the Federal Reserve decided to issue another $10 million and put that in circulation as well, for a new total of $20 million. But you didn't get any of the new money to offset the imbalance. So you just went from having 10% down to 5% of the total currency in circulation. And even though you didn't spend a dime of your money, the value of the currency you saved just got cut in half. So when the new money is issued by the Federal Reserve and it gets put in circulation, the currency you hold loses its value because the prices will inflate to adjust to the new amount of total currency in circulation. So let's look at the current inflation this way. Say you're a teenager saving for college. You started saving at the beginning of 2004, and to make it simple, we'll start with the savings of $2,000 every January 1st since 2004. So in January 2004, 5, 6, and 7, you saved $2,000 at the beginning of each year. So at the end of 4 years, you've amassed $8,000 total towards your college education. Unfortunately, over the past 4 years, we've been in an endless war on terror, and it's caused our government to spend more money than ever before. And this decreased the value of the dollars that you set aside for college. Since many look to gold as a barometer for the dollar and its current value, let's see what happened if you put your money into gold on January 2004, 5, 6, and 7 and see what it would be worth today. The price of gold in January 2004 was $410 an ounce, and you'd be able to buy 4.88 ounces. In January 2005, it was $422 an ounce, and you'd be able to buy 4.73 ounces. In January 2006, it was $560 an ounce, and you'd be able to buy 3.57 ounces. And in January 2007, it was $630 an ounce, and you'd be able to buy 3.17 ounces. So this gives you a total amount of 15.57 ounces of gold in your possession. And that 15.5 ounces of gold would now be valued at $14,484 at the current spot price of $930 per ounce. So the inflation over the last 4 years has been a total of $6,484. So the buying power for that original $8,000 you saved has been reduced to roughly $4,480, almost half. This is destroying your ability to save money, causing you to lose a good portion of your savings without even spending it. So in essence, it's punishing you for trying to save money for a future investment and endorses spending today while your dollar is worth more, and increasing the total debt accumulated by Americans. Now keep in mind, you're not really making money by putting your cash into gold and silver. You're only hedging against inflation or maintaining the value of the money you just saved.
The problem is what everybody is using that they think is money, dollars, doesn't retain its value because Ben Bernanke is printing it like crazy.
If the dollar does make a comeback, if the world considers its current moves and its future moves to be serious about stopping inflation, to not lower the interest rates anymore, will gold continue to go up?
The dollar's not going to make a comeback. I don't care how much they talk it up. It's going to continue to sink.
That's not what I asked. If it does, if the dollar does hold its value.
It's impossible for that to happen. You know, you might as well ask me, you know, if pigs sprout wings, can they fly? The dollar's not going to go up.
But you know what? The longer it takes for us to change course, the harder it is to make the change, right? The deeper into debt we go, the more money the Fed prints, the harder it is to pull that inflation genie back in the bottle. Because the reason that the politicians are doing this is because they don't want to face the pain. They don't want to deal with reality. Well, the more they do this, the more painful reality becomes. So if they can't deal with the pain today, why would they deal with twice as much pain in the future?
The reason gold is so important, gold and silver, is because gold and silver is God's money. It's money made by God. And then in 1971, the U.S. government, under President Nixon, took God's money and turned it into man-made money. Never in the history of the world, this is the thing, never in the history of the world has this ever happened. In 1971, the U.S. and Nixon convinced the entire world to replace gold and silver with paper money. This stuff. Cash is trash. Now the problem is, so the dollar is going to keep dropping. So one of the reasons I can predict what's going to happen is I can predict the dollar will keep dropping simply because the U.S. government and now the euro, the European central banks, are printing so much of this trash. So you'll see gold going up in price, oil going up in price, real estate going up in price, because this is trash. So there will be more this printed than ever before, which means the dollar keeps coming down and other things keep going up. And that's really what's going to happen. It's predictable. And eventually this will go to its true worth, zero. So all of you savers out there and people trying to save this trash, you're going to lose big time.